May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar, the Dixie, all right, the US dollar index. All right, now on the monthly, what we can see is we are in an uptrend, all right, and you can obviously see that from these lows, it's been up, higher high, higher low, higher high. And this is the latest and what could be potentially another higher low for the next higher high. All right. We are in this ascending channel. And again, I don't use, uh, what do you call these things? Trend lines and these patterns as a way to mark trades or entries and whatnot. I actually just use them to mark structure. That's all. And what becomes really apparent is obviously apparent is we are making breaks of market structure to the upside. All right, we make a higher high, then we pull back all the way down to make a higher low for the next break of structures, higher high, and we pull back again to make another higher low. Each one of these higher lows can be measured by a Fibonacci retracement tool, okay, from the low to this high. And you look at 50% of that trading range and you say, okay, when price gets below that 50%, I can start looking for longs. Well, it does. And it comes back here. All right. You can get fooled here. All right. But if you know that we are forming a channel going up, you wait patiently until you see a a break of market structure, all right, where it is definitive, that says it's definitively saying once we break here, we have a shift in the market here from bearish to bullish. You can see that once we break these highs, that this pullback is over. It's done. You don't see that so much with this one. All right, you see uh, uh, a corrective structure here. All right. Price finally sweeps the buy side liquidity and then jams down. All right. Breaking below that low, but protecting the swing low. All right. The same thing happened here. Pulled all the way up. All right. Great. We broke market structure here. We are bullish. You wait for price to pull back within this bullish impulse and you wait for price to hit a Fibonacci retracement area, wait till it goes past the 50% of this trading range right about here, right? And you are in discount. This is premium below and above the 50%, the equilibrium of this trading range. You want to take your longs from discount. You want to take your shorts from premium. But being that we are in an uptrend, you're going to wait patiently until price pulls back into your long area, all right, your buying zones, and you wait patiently for price to give you that bullish break of market structure. I hope you appreciated the couple of minutes I took out to explain that. All right, now if we go up to the weekly, all right, what do we see? We kind of zoom in on the current price action, right? And you can see price is, you can see it. You can see it making the lower low, lower high, lower low, lower high, lower low, right? But it wasn't one of those lows that says I'm closing below that low. No, I'm just sweeping it. And when you see a sweep, a wick down and then back up into the range, you know that price has business to take care of up higher. All right. And what did it do? It went up higher and we swept that once a lower high. We broke it here. We tapped it here. Yes, price only swept it and started to pull back. But what do we know? We know that this is the last impulsive move up. This is the last low being made before it made that new high here. So, whoops. So you wait till price pulls back into this bullish leg and you pick an area. You say, where is price likely to turn around? Well, right here, right below that low. All right. We get a better look at this on the daily. Let me show you what I mean. Where is it? There you go. All right. Now, you see this area here? This is a weekly fair value gap, and price is tapping that fair value gap. We haven't gotten a close below it yet because it's holding. It's holding. All right. And for me, you see the impulsive move from this low to that high. You wait for price to come back into the buying range of that impulsive move. This is the correction. Is the correction over? We don't know yet. We'll know when we see a definitive shift in the market. And what would that be? An engulfing move at a Fibonacci level. Put your Fibonacci on it. On the low to the high. Move it over to the right. And you can see price came back to the 786, 705 area. Boom, right? Below the 50%. This is where you start looking. And right at this weekly fair value gap. Now, what do we have here? We have this sell to buy wicks here on a lower time frame. This is an area of demand and it is holding. We've gone to the midpoint of that demand and it is holding. I'm looking for price to continue higher from this area. Now, I would be targeting this fair value gap here. I forgot I had to do that. I'll be targeting this fair value gap here. You can see it clearly. Oh man, what did I just do? What did I just do? Come on, man. Oh man. Let me see if I can. All right. Sorry, y'all. All right. Yeah. I'll be targeting that fair value gap here because I believe we're going to get this older fair value gap here will act as a speed bump. We go up into it, see a pullback from it, and then a continuation is what I'm looking for. Now, you'll notice that I have a mark here. All right, this low. This is the last low before that impulsive move that broke structure here. All right, so this becomes my invalidation point. If price continues down and closes below that low, I'm not looking for longs. I'm stopped looking for longs because that is a market structure shift in the other direction. All right. And I believe these higher highs, higher lows, higher highs, higher lows, higher highs, and this potential higher low will lead me to the next higher high. I believe that the uptrend is still intact until it breaks here. When I see that happen, then I think, okay, we're probably going to be targeting this low. All right. Up until that point, up until this low is broken at right around 98, 98.5. All right. 98.5. I'm going to be looking for longs and I'll be looking for longs up here. And what I'm looking for is that high, Thursday high to be broken. That's what I'm looking for. If I go down to the 1 hour, you can see, sorry, from the daily to the 1 hour, you can see price is having a little problem getting a little lower here, right? I'm looking for this to come down and then continue up higher. If it takes out these relative equal lows here, then looking for longs might not be a great idea. All right. But definitely below the swing low here, that intermediate swing low would, for me, kill any thought of looking for longs for a good while until I see another bullish break of market structure. But right now I'm looking for this fair value gap here on the weekly. I'm looking for it to hold and continue up higher. If I look on the 4 hour, do I see, we have this pretty nice size area here that is barely holding on. It's a fair value gap. That price is abused already. But what we have is this push up rally, base rally here, and I like this. This is the sell to buy wicks that I pointed out on the daily, and that is what's holding. This is an area of demand. I'm looking for that demand to push prices higher to these highs. Okay, that's it. That's all the, the details I need to get you. Now, what I want you to do with this information is apply it to your other pairs. All right, to the uh, gold against the dollar, to Euro USD, to Pound USD, to Aussie dollar, USD, New Zealand dollar, USD, USD CAD, USD Swiss, USD Japanese yen. All right. Bear in mind that we're looking for strength in the US dollar this week, probably starting from the beginning of the week. We have NFP information coming out later on. You can see the information in here. FOMC minutes are going to come out. I don't know what they're going to be talking about in that, being that the government was shut down. All right. If we go to this one, existing home stats, yeah, all of that is not included. But if you go to Forex Factory, you can see we have non-farm employment change here at 8:30 on Thursday. That's going to be interesting. We have CPI data for the pound, FOMC minutes for the US dollar on the, the the Wednesday before it, and good good a good week of good market liquidity going in. So I'm looking forward to trading this week. I hope you are too. Make sure you leave a like and a boost, and make sure you leave a comment. Ask any question you need. Ask about invalidation lines. Ask about breaks of market structure, and why isn't this a break? Why do you call it a sweep? Ask any question you want. Okay, I will see you in the next video. Thank you for watching.